Howdy folks, and welcome to the Daily Coin. My name is Rory, and today is Tuesday, October the 11th, 2016, and I have the great honor and very distinct pleasure of welcoming to the show for the first time Dr. Warren Coates. And Dr. Coates graduated from the University of Chicago's Economics Department, and he was a staff member of the IMF beginning in 1976. And he became the chief of the SDR in 1983. And Dr. Coates is an author of several books on central banking and monetary policy, and he has worked with many countries to establish new central banks and to develop and or strengthen existing central banks and to introduce policies to guide currencies, payment systems, and banking systems. And as you can tell from this brief description of his resume, a quite extensive resume, this is someone that is in the know as far as our monetary system, what's happening with the SDR, and that's the reason that I wanted to ask him onto the show, because who better to inform us than one of the people that has been responsible for not only the SDR, but for central banking policies around the world. Dr. Coates, welcome to the show.
Thank you very much. It's a pleasure to be here.
Well, we're certainly glad that you took some time out of your day to join us. And I'm just going to jump right in. And with Goldman Sachs coining the term Brics in 2001 and the BIS adding South Africa to the group on an unofficial basis, as well as vying for the renminbi inclusion in the SDR as early as 2005. Did the IMF consider the BRICS nations as a rising power as some of the commercial banks and supranational institutions were? And were there conversations about the rise of what we now know as the BRICS at the IMF, and how did you and your associates view the rising East while you were at the IMF?
Well, I had retired from the IMF prior to those possible discussions, so I wasn't privy to them directly. But the IMF's general view is that our job is to facilitate economic growth and development all around the world, for everyone. And so it was certainly welcomed that the BRICS countries were growing and expanding and raising the standard of living for their citizens. So that would be welcomed by any country. The issue really, I guess, is what impact that has on financial relations between countries, between the BRICS and other developed and less developed countries. And that points in part to the international monetary system by which global commerce is paid for. And one of the awkward features of the system as it exists now is that a large number of countries have floating exchange rates for their currencies against other currencies, and this introduces a great deal of uncertainty for traders and investors who deal across borders.
I want to kind of turn to gold, which is I've learned over the years that gold is money and everything else is credit, and that was what J.P. Morgan said. I believe it was back in the 1930s. And Chatham House released a study in 2011 showing the benefits of having a gold-backed currency. And according to this study, with 8 individual bullet points, if gold were to be reintroduced to the monetary system and revalued at an appropriate fixed exchange rate, most every person on planet Earth would benefit. And why has this study, conducted by one of the IMF's own team of researchers, And I don't want to say that it's been ignored, but we have no gold-backed currency. And how do we, or why haven't these 8 points been applied to any currency?
Well, I looked at, you sent me a link to the Chatham House study, and they really say something quite different. There's no mention of IMF staff involvement. After the 8 possible advantages for using gold, and let me preface this by saying that the period of global trading, or the period of the world over 100 years ago, when international financial relations were largely based on gold, the world flourished. So the gold standard worked very well during that period. It brought a great deal of certainty and discipline to international payments. So I don't want to ignore the high success that was enjoyed under the gold standard. But the report that you refer to from Chatham House lists 8 different reasons often given for gold being advantageous, but they immediately follow that list by saying none, and I'm quoting from the report, none of these reasons appears sufficient per se to justify the reintroduction of gold into the international monetary system. And that's my view as well, that there are some weaknesses and deficiencies of anchoring individual currencies as well as the international monetary system to any single commodity, including gold. The value of gold relative to everything else, which is what's relevant when we're talking about the value of money that's linked to gold, has been very unstable. Any look at gold prices over the last decade, for example, it's all over the map, and hardly would provide a very stable anchor to the value of money. And the way the gold standard worked, and the reason, one of the main reasons, or an important reason why it collapsed, why countries gave it up, was that its very popularity and the way it was organized at the time of countries issuing currency against gold, having to buy and hold and safeguard and warehouse gold, its very popularity by central banks increased its demand far in excess, as these economies grew, far in excess of new gold discoveries and the ability to mine and refine additional supplies. And this imposed a serious deflation on the world. The demand was rising more rapidly than the supply, so the value of gold went up, which meant prices measured in gold were being forced down. So that's not a desirable feature of an international monetary system. So I would not want to go back to the gold standard, and the Chatham House article also suggests it's not desirable to go back to the gold standard.
As far as the value of gold and it fluctuating, why wouldn't it was at a fixed rate of exchange for that time? I mean, why wouldn't that fixed rate be suitable in today's environment? I mean, it seems like it would work. I mean, it would have to be at a much higher rate than, the $42 or whatever the Federal Reserve has on their books. But I mean, it seems like that if it were more relevant to the debt that's out there, that's in the world, that it would be quite appropriate, and that it would rein in some of this debt that's on the books.
The goal of a good monetary system, the central goal of a good currency, is for its supply to be regulated in a way that its value is stable relative to the things people buy. That's what the man on the street understands by currency with stable value. Or if you talk about the desirability of zero inflation, which I think is the appropriate goal, we're talking about a currency whose value relative to an average consumption basket is perfectly stable. Gold does not have that property. If you fix the value of currency to gold, then the price of gold never changes relative to that currency, but it changes relative to everything else. Its relative price fluctuates a great deal relative to everything else. That means that the value of currency would be fluctuating a lot relative to everything else. We'd have a lot of inflation and deflation precisely because the currency is fixed to gold, that its price doesn't change relative to gold, but gold's price is changing a lot relative to everything else. So it's not a good anchor. It was not bad. I want to repeat that during the several decades that the world was largely on a gold standard, it performed quite well. But we can do a lot better.
Well, if we can, I would certainly like to see us get on with it, because what's happening right now is not working real well for me.
Well, that's true. That's true.
And there are a number of people, Dr. Coates, that believe China will introduce gold into the SDR basket of currencies, or will back the renminbi with some gold. And it's been suggested a 5 to 15% gold weighting in the SDR basket of currencies may be appropriate. And what role on the global stage will gold play in the coming years?
Let me take the two parts of what you're suggesting China might be interested in doing.
Okay.
So first of all, the existing articles of agreement of the members of the International Monetary Fund preclude the use of gold. So there's no question or issue or possibility of using gold in the SDR valuation basket without going back and getting agreement among all the member countries to change the articles of agreement. But secondly, I have not heard any suggestion from any of my many Chinese friends that there's any interest on the part of China for introducing gold in any way in their monetary dealings. What would be their incentive? Why would they wish to do that? China is not a major gold producer, so they would have no interest in promoting the world demand for gold as a producer. So I don't understand why they would have any interest in doing it, and I doubt that they have any interest in doing it.
Okay, that's fair. What role do you think that gold will play, if any, on the global stage, as far as currencies are involved, or as far as being more of a monetary metal?
Well, I do think that it would be very desirable for currencies to fix themselves firmly to what I call a hard anchor as a way of disciplining monetary policy. Gold is one example, and that's what the gold standard was about. It was fixing the value of currency to gold. So I think we need to move in that direction, that it would be desirable for each and every. There are two different issues. One is, or many issues, but at least two, that for each individual country, it would be desirable to fix the value of their currency to something like the SDR, gold, or some other real asset as a way of stabilizing and guiding the monetary policy of that country. In addition, it would be desirable to have a unit like the SDR that is internationally issued for financial dealings between countries. Those are two different issues.
Right.
They can be interrelated. Many countries, smaller countries, fix their exchange rate to the U.S. dollar. Some in the European area fix their currencies to the euro, and it would be they would have a more stable value for their currency relative to all of their trading partners, not just to the U.S. or to the EU, if they pegged their exchange rates to the SDR, because its value comes from 5 different currencies. It's like the difference between investing in a mutual fund that's a portfolio of different assets relative to buying a single stock in a single company. A portfolio is more of securities, or a portfolio of currencies is more stable than any one of them.
Right. And
so those would be the desirable things to do, and I think the most promising place to start is with the existing SDR.
Yeah, there's been a lot of changes to the SDR just in the past few weeks, and do you think
Well,
that
the renminbi was added, yes.
Yes, it was, and 3 different versions. And do you think, Dr. Coates, that the SDR could successfully replace the dollar, the U.S. dollar, Federal Reserve note as the reserve currency?
Yes, I think it would be very desirable. I'm not sure what you meant by saying it was 1 and then it was 3. What were you referring to?
Well, there's the official, or the OSDR, and then there's the MSDR, which is the bond that China has been given permission to
okay.
issue.
Let me clarify. There is
Okay.
only one SDR valuation basket, and as of October 1st, it went from having 4 currencies in it to having 5 by adding the renminbi. So there's only one version of that valuation basket.
Right.
There are different assets that are denominated in it, just as there are tens of thousands of assets denominated in U.S. dollars. It's the same thing. And you're referring to the World Bank's issue of an SDR denominated bond in China. So that becomes a private SDR denominated security, a bond that people can buy or sell. But there's only one version of what an SDR valuation is.
Okay. Well, thank you for that clarification. And do you think that the SDR can successfully replace the Federal Reserve note, the U.S. dollar, as the reserve currency?
Right. It certainly can. It would be desirable if it did, but whether it's politically realistic at this point that will happen is a different question. It would be desirable because for the United States, to the extent that other central banks hold U.S. dollars in their foreign exchange reserves, the U.S. to supply dollars for the People's Bank of China and other central banks to hold U.S. dollars in their reserves, the U.S. has to supply those somehow. It's supplied by a current account deficit on the part of the United States. In other words, we spend dollars abroad importing goods produced abroad to a larger extent than we pay for that by exporting our goods. We have a deficit in the balance of payments, or the current account of the balance of payments. That almost certainly has contributed to offshoring some amount of our manufacturing. rather than continuing to manufacture and export to the extent that would balance our imports, we have to run a deficit in order to supply U.S. dollars to the rest of the world. That's not very desirable in the long run, especially if it happens in a big way as it does. So it would be preferable for an internationally issued reserve asset like the SDR to play the role of the reserves that central banks hold for the purpose of cross-border payments. In addition, if to the extent that individual countries pegged their own currency to the SDR, that would give greater certainty to exchange values across countries in the world. And that was one of the great advantages of the gold standard, period, that basically it was a one world currency, gold, or, gold, convertible gold valued national currencies. And that greatly facilitated greater trade, and greater trade meant greater productivity on the part of trading companies that raised the standard of living of the entire world. So it removes uncertainty and noise from investment and trading decisions, and that raises everybody's standard of living. So it would be highly desirable to do that.
I would love to see something change to where the standard of living in the United States and around the world would be elevated, would return to a growth mode as opposed to the decline that it's been in for the past 30 or 40 years or longer.
Absolutely.
And I want to follow up on that, if you don't mind, and that if the SDR and is a basket of fiat currencies, doesn't that make the SDR a fiat currency derivative?
Yes, and that would be the existing SDR, and I have long proposed replacing the SDR valuation basket with goods for valuation purposes rather than currencies.
What types of goods?
I would take the core CPI of the U.S. as an example. Gold is an example. The gold standard put a single commodity, a specific amount, gold, in the as what a currency was pegged to. And it's much better to have a variety of such things rather than a single commodity. But that would give it a real anchor. It would no longer be a fiat currency.
I personally would like that a lot, and I think that most of my audience would as well. This fiat currency is, I think that it causes a lot of problems.
Yes.
And the MSDR bond that is now part of the global bond market and appears to be set up for the specific purpose of replacing U.S. Treasuries. It is a little unclear the value of bonds that have been approved by the World Bank, and it seems China has big plans for the MSDR bond because they pushed for this for quite some time, and it appears that China could they introduce a gold-backed bond utilizing the MSDR? And since they already have,
those are alternatives. I mean, they could index the bond in gold. They could index it in dollars. They could index it in euros. They could index it in SDRs. But it makes no sense to talk about SDR gold somehow. Those are just mixing up two different things.
Okay. So that's impossible for there to be a gold-backed SDR of any kind.
Right.
Okay.
Right. It's either gold-backed or it's SDR-backed. Let me just quickly run through what I see as the value of this World Bank bond issue. But I mean, first of all, the World Bank needs to raise money for what it does, and it usually issues dollar bonds or euro bonds, or sometimes pound sterling bonds, and so on. So it can denominate the bond it borrows with in whatever currency it wants. The advantage that I see in denominating it in SDRs is that it is a small contribution to building up the use of the SDR denomination in private financial instruments. Banks could open SDR deposits, private SDR deposits at commercial banks instead of US dollar deposits or euro deposits or whatever. And the more the SDR is used in the private sector in these ways, the more attractive the official SDR used between central banks becomes. Because, if you think of the attractiveness of the dollar in the world, an important part of it is the extensive use of dollars for all kinds of financial instruments that creates a large, deep, liquid, dollar-based financial infrastructure. That makes holding dollars in the reserves of central banks much more attractive than if those markets didn't exist. So expanding the use of SDRs in the private market is a small beginning in that direction of building up private SDRs to support the official SDR. But China has a special reason, I think, for being attracted to the particular issue that the World Bank just undertook. And that is that there has been a capital outflow from China that China has been resisting in the last few years. And this provides a way by which Chinese can invest abroad without having to convert their currency into dollars or some other currency that would put strain on either the exchange rate of the renminbi or the reserve holdings of the People's Bank. The People's Bank of China has been intervening quite heavily in the last year or two to prevent its currency from depreciating. And so its huge foreign exchange reserves have been running off at a quite rapid rate. They've fallen from something like 4.2 trillion US dollars all the way down to around 3.2 trillion dollars. That's a huge decline over a fairly short period of time. And a lot of that is to facilitate the outflow of capital from China as people convert the renminbi into dollars or other currencies. Now, to the extent of this World Bank issue, Chinese can buy the SDR bond with renminbi, with their currency, without having to convert it to another currency, and they will be repaid in 3 years when the bond matures in their own currency, in renminbi. So it satisfies some of the demand of the Chinese to invest abroad without actually drawing down reserves of the central bank or depreciating the currency.
Okay, that makes perfect sense.
Okay.
I want to come back to the SDR as in its being a derivative. I mean, how would that be? How is a derivative, which Warren Buffett has described as, he's described derivatives as weapons of financial mass destruction, and how would a derivative of a fiat currency, and fiat currencies by nature aren't they have no backing? I mean, how would that make it? How would that be better or make things more stable? I'm a little bit confused by that. Dr. Coates. And
okay, well, the bond is not a derivative, and it's simply denominated in SDRs rather than dollars. So there's no derivative. There could be SDR derivatives, just like there are dollar derivatives and so on, but we're not talking about, there aren't any in the market that I know of, and the bond is certainly not a derivative.
But an SDR is a derivative of the SDR.
No, would you call gold a derivative? The SDR is a unit of account, just as gold is a unit of account.
Okay.
And it's being used, or the dollar is a unit of account. It's being used to denominate a financial instrument, which in this case is a straightforward bond.
Okay. All right. I can wrap my head around that.
Okay.
And inflation. John Maynard Keynes has described inflation as little more than theft, and the way that he actually described it is by a continuing process of inflation, government can confiscate secretly and unobserved an important part of the wealth of their citizens. And why wouldn't central banks around the world have a goal of zero inflation, and why isn't there a war on inflation? We have wars on everything else.
Well, I'll leave the war part aside, but I agree with you that I think zero inflation would be a more appropriate objective. The reason that the Federal Reserve and most other central banks actually have chosen a low rate rather than zero, and usually most of them have chosen 2%, is that there's widespread belief that the CPI, or Consumer Price Index, and other indices of prices overstate true inflation. So some of that was corrected some years back when they revised how they calculate the CPI in the United States. So a lot of that bias some of that bias has been eliminated. But there are two reasons, I guess. Let me repeat that I support a zero inflation rate. But the two arguments for a non-zero but low target, like 2%, is one that the index is probably overstating the true inflation. The other is, which I think is a mistaken argument, is that with a modest inflation, it makes it easier for wage adjustments to take place when a decline in real wages is called for by economic conditions, as they are sometimes in recessions and so on, or in certain areas where products are no longer as demanded as they were. Having a modest inflation allows a real decline in wages without nominal wages being reduced. You just keep nominal wages where they are and the real wage goes down modestly. Now, I think that's a fallacious argument, but
yes,
it's one of the arguments that is made for a positive but low rate of inflation target.
Do you go to
But I agree with you that I think it should be zero.
When was the last time that you went to the grocery store, Dr. Coates?
Oh, a few times every week.
Okay. then you're well aware that inflation is in the United States is much higher than 2%. I mean, it's, the stated what the official inflation rate is at my house is of no consequence when I go to the grocery store, and items have shrank in size by 15, 20, 30% in some cases. And
well, different things behave in a different way. My gasoline bill has gone down a lot.
Yes.
Blueberries I find fascinating because they go up and down, up and down. And I think you were hinting that sometimes the grocery stores try and disguise a little bit what they're doing with prices by changing the size of the quantity that they sell. And that's particularly true with blueberries. You know, they'll sell very small little things for $5 a basket, and then on other occasions they'll triple the size of the amount they're selling and sell it for the same amount.
I understand as far as, you know, seasonal fruits and the way that they operate. And I was a produce buyer for a number of years, so I've seen those dynamics in play
Yeah,
up close and personal. And
yeah,
but when you have healthcare, for example,
right.
the cost of healthcare is completely out of control. It is way out
Yes,
of control,
but
but it's not
I, I,
counted in the it's not
I
counted
agree with
as
you.
inflation.
I agree with you, but by inflation, we don't mean one good becoming more expensive than another. We mean the value of money in general losing value.
Right.
And what's happening to healthcare is not an inflation phenomenon. It's a medical care problem. The cost of delivering medical care because of government programs or the way we're organized, or, you know, there are a lot of different reasons, but we don't want to confuse what's happening to the cost of individual products and services with inflation or deflation, which is the value of money in general.
Okay. Maybe I've just been confused about what inflation is, but you know, when I'm
Well,
looking at
you can say that a particular product is inflating relative to others, but that's not a very helpful way to use. You know, it's becoming more expensive while other things are becoming less expensive. So language can be a little bit confusing sometimes, but
okay.
we should keep inflation to refer to the value of money. That means against all the things that it buys. Some are going up, some are going down.
Okay. Because I mean, maybe I misunderstood the definition of inflation because I thought that that was the. Well, what I was saying
Hello?
is that I think
Okay.
that maybe I've been confused about what the definition of inflation is, because I've been under the understanding that inflation is tied to the money supply and how much money is
Yes.
chasing particular items, and that is
Well,
what constitutes
not particular
inflation.
items. It refers to the value of money. So if you increase the supply of money a lot, then its value will go down. But that means against everything. You know, that everything becomes more expensive in terms of money, so the value of money goes down.
Right.
That has to be distinguished between what's happening to individual products. Our telephone prices actually have plummeted from 20 years ago. They do 30 times what they used to do and cost 20% of what they used to. Well, while they're plummeting, there are other things that are going up. None of those has anything to do with the value of money by itself, which is the average of everything.
Okay. All right. Well, this is my last question, and then I'll let you
Okay.
get on with your day. And I really want to tell you how much I appreciate your time and your wisdom and just taking time out to share with us today, Dr. Coates. I really sincerely appreciate it.
You're quite welcome.
And between 1966 and 1970, you studied economics at the University of Chicago, and
Right.
your doctoral dissertation was on the September 1968 changes in Regulation D and their implications for monetary supply control, with Milton
Right.
Friedman heading your dissertation committee, which also included Robert Gordon. And what was your relationship with Mr. Friedman, and would he be proud of the work that you've done over your career?
Well, I am certainly proud at having had the opportunity of studying under him. He I took a number of courses from him and from Gordon, and he guided my dissertation work, and he was chairman of my dissertation committee, which was a great honor to me. He's a fantastic scholar and person, so I was terribly privileged to be able to work with him. I have no idea what he would think of my work, but I would like to think that he thinks that I have been honestly and faithfully applying the tools and wisdom that he helped him impart to me. So I hope he would be happy with that.
Well, I think that he probably would. I think that our monetary system, not only in the United States but around the world, I think that it's coming to a crossroads, and something's got to change. Something has to give, because there are too many people that are suffering under these current systems, and it seems that a lot of the issues that we are dealing with stem from the Federal Reserve note, the U.S. dollar, and the way that it's been implemented around the world, and that exorbitant privilege has been abused, in my opinion. I mean, I may be wrong, but that's what it looks like from where I
Well,
sit.
I quite agree, and I would love to see us return to a hard anchor.